Hello everyone, hope your paper went well, and if you have written a financial reporting paper and you are very sure about how the paper went, I request you not to continue watching this live. You can continue with your AFM preparation. This is for those students who are slightly confused, who are concerned that a lot of time it happens after you come back from the examination, you want to see the answer, and till the time you see the answer, your mind doesn't work for the next paper. This is the video for those students. I'll quickly give you the solutions of MCQs and overall review of the paper, and there are some vague MCQs as well. Every time one or the other surprise comes in the question, so that is one aspect. So this is not to demotivate you. Even if your paper has not gone well, please keep this thing in mind. The performance of other students who may not have been that well, and you would get some benefit of doubt, especially in case of vague MCQs and all of that. So this is purely for you to get clarity of thought in your mind as to how was your paper, and you should immediately switch to AFM. Okay, how much ever I say, of course you will be looking for MCQ solutions from one person or the other person. So just to ensure that you don't waste much of time, I'll do a quick recap or revision part of it directly to the solutions. First one is with respect to joint operations, what should be disclosed? So there should be a here 60 crores is pertaining to Zara Limited, and the question is asked in the books of Tara Limited. So Tara Limited's expense is 40 crores, so they recognize the provision of 40 crores and a contingent liability of 60 crores, because if the other party does not pay, the demand has come to Tara Limited. Now if you have any further doubt, or if you feel some otherwise, you can definitely put it down in the comment section. Then the second question on classification, the question is not clear as to whether the intention of the entity is to hold it till the maturity to collect all the cash flows of interest and principal, or to sell it, or to make profit. That is not given in the question at all. So how will we decide whether it is amortized cost or FGT or CI? So that is one big aspect in this question. It can be either of A and B, because even in case of variable interest, you could use amortized cost method. Then reportable segment, it is a straightforward thing, 10% criteria if you apply A, B and E. How much should be current liability? Again, there is a blunder here, because the lease rentals that you pay, it comprises of principal plus interest, and only the principal component should be your current liability. Now they have not given the interest rate, the discounting rate, any of those things. So, but given the information, 8,40,000 should be the correct answer. Then what is the amount of revenue to be recognized? Elevator contract, standard question. I hope all of you have done it right. 15 lakhs, that is cost plus whatever, I think 25% of the balance cost that has been already incurred. Then this question was like very simple, and that is where MCQs can actually help you. Government grants to be recognized by the entity, the conditions to be satisfied. This is sitter question, so 2 out of 2 is for sure here. What is the stance of CA regarding conflict of interest? Again, a straightforward question. This question was picked up from a specific paragraph in Ind AS 101. As it is, they have picked it up and they have put it out as a question. The answer is 2, 3 and 4. Then coming to the next case study. Here, after negotiation, what should they do? It will still be a current financial liability, because on 31st March the condition was breached, and the rectification or the banker agreed after the financial statements have been issued, so it will be classified as current. Then here I arrived at an answer. I did a quick calculation, might be incorrect, 1512.80. Then goodwill 2426, which is also done by my student. Then accounting treatment for cost incurred for renovation. Very smartly in the question they have given food court, spa and gaming, but only food court and gaming they said that it will enhance, so only this should be capitalized. Then net asset value should be 16 crores. It should be based on when you are finally finalized. Then purchase consideration is 22 crores plus 3 crores of contingent consideration, 25 crores. And for here you will recognize the fair value, and subsequent change will recognize the P&L. That's it. Okay, so that's a quick answer from my side on the MCQ. Maybe a couple of them I would have missed, possible. I'm not sure, because the questions were still vague. Coming to the normal questions on consolidation, standard question here. Now only thing, the way they have tried to confuse students, what I would say is, here they have said check has been issued and check is yet to be received. So this is something which is called as cash in transit kind of a thing, right? So that is the adjustment here. So when you eliminate, here it is 120, here it is 160. 120 will go off from here, 160 will go off from here, and you will have 40 as cash in transit. That is one adjustment. Dividend adjustment has been standard. Apart from that, after 2 very difficult attempts of consolidation, this has been a pretty simpler one. And here they are given based on purchase consideration. You can just do a proportionate basis. Then again, this is a question from the study material directly put up. Then this is on interim financial statement where you have to bring the deferred taxation impact. This again, even in my India's 40 YouTube revision, I had told that this kind of questions can be tested, and that is what has been tested in this particular paper. Right, exactly the same thing what is there in the study. This is more for disclosure requirement, and India's 40 had clearly said that disclosure requirement can be tested from this particular standard. Then this requires some knowledge of taxation for computation, nothing very difficult. Then this is for your restoration related provisions. So a lot of focus is there on journal entries. Guys, if you find the MCQ solutions and the discussion useful, do please like the video and share it with your friends. They will give you some motivation at least. Then here it is on India's 102, again a standard question. A lot of extra text has been given here just to confuse you, but the answering pattern will be as normally what you do. Then this is on points, again a standard question. Then this is on voluntary adoption of India's, how to treat different items, concept and offsetting, very typical theory questions. But again, even if you have not done this thoroughly, you could have answered based on a general understanding. You will be getting some marks. Qualitative characteristics, they keep on testing once in a while as a part of theory. This is on performance obligation, how many performance obligations are there. Then revaluation, again a standard question, nothing difficult here. And here whether it is an estimate or change in error, again so 4 marks question for each question for the correct answer or wrong answer you could do. So largely if you put me slightly long, because a lot of journal entries have been asked, and average question, right? If you have any disputes on the MCQ solutions, you can ask me. But now, though if you are writing this paper, my sincere request to all of you, please focus on AFM paper, and that is what you have to focus on. Even if you missed out something in this paper, you have to compensate that with the AFM paper. All the best for AFM. Start with maybe smaller topics today, follow it up with larger chunks tomorrow, and the last day you can do a quick revision of theory topics, which will actually help you to push forward your preparation. Don't take bigger topics today because you are already exhausted after your AFM paper, right? So thanks a lot.